Going on Turnkey's Facebook group. This is a long time coming. And I admit, if you guys were on the last Facebook Live we did months ago, Facebook has since updated their dashboard and everything, and I admit I don't have a clue how to use it, really. So I am hoping that doesn't become too distracting. But yeah, so we haven't done a Facebook Live in a long time, and since then the group has gotten quite a bit bigger. So I'm actually really excited to meet new people, answer turnkey questions. Some people already joining. I'm glad to have all of you. I was just saying that when I used to do the Facebook Lives, the Facebook dashboard was very different, and to me it was a lot easier to, Brian first, it was a lot easier to navigate. And one thing that, if you were on my last Facebook Live after this screen had changed, it used to tell me who was coming on. Like I could see who you guys were. And as of now, unless I do some more investigation, I cannot for the life of me figure out how to see who's on here. So, say hi in the comments, because otherwise I don't know how to tell that you're here. Obviously, Brian's here. Thanks for the first shout out. We have a lot of people joining. Super excited. Austin, Allie Turnkey Boone. I don't know if I want that name. I'm like, oh, every time I try and leave Turnkey World, I get suckered back into it. So there must be something good about it, right? Tim, driving to Arizona and listening. Where are you driving from? And where are you, like, doing anything fun in Arizona? Drew, my man, one of our longest running members, one of my personal favorites. Drew, if you don't know, actually contributed an amazing article that we have posted in the Turnkeys group. If you go to the announcement section, I think I said video. There's a blog about creative financing options. Drew did a really good job at scaling a lot of properties, so he actually wrote out the details of the creative financing options that he used. So if you have not seen Drew's article, I don't think we've actually talked about it in a while since the group got a lot bigger. So go to the announcements section and check that out because it's awesome. Arek, I hope I said that correct. Great to have you. Amy, awesome to see you. You've been around for quite a while. Frank, definitely been around. Tim, Huntington Beach, I like that. So you're at a baseball tournament? If you're watching Turnkey's Facebook Live during a baseball tournament, I'm very impressed. Trace, Timothy, thank you guys all for saying hi. This is exciting. So if you are newer to the group, Eric, that actually makes a lot more sense. Thanks for the clarification on that. And actually, I kind of like your spelling better than the normal Eric. Great to have you guys all here. So when I first started the Turnkeys Facebook group, was it 2 years ago? I've lost all 2020, kind of threw my time frame off a little. I barely even know what year we're in. I think the Turnkeys group has been around for a couple of years. When I first started the group, we would do, was it weekly lives? Drew, you guys may remember, I think it was weekly Facebook lives, and then I can't remember what happened. I got completely distracted. The lives kind of tapered off. I did one earlier in 2020 during quarantine. Everybody was obviously distracted, so we ended up not, keeping that going. But if you guys find these to be helpful, I'm happy to schedule them because honestly, I love doing them. I love hearing from you guys. Obviously, everybody can post in the group and ask questions, but it's really fun to be able to real time. Thanks, Mike. 2021. I'm yeah, that is it. Right? It's been a long year. But it's fun to interact with you guys. It's fun to get live questions. I love interacting with you. And I love just answering your questions. So I think it's a fun little twist to just putting posts up and typing. And obviously there's limitations on how much I can type or information I can give or anybody can give. So I'm pretty excited about these. We've already got a lot of people watching. So here's kind of how these work. I usually do them for about an hour. It is completely open. If you have a burning turnkey question, pop it into the comments and I'm going to answer it live. If for some reason you have a question, I can't remember if you guys can see who's commenting. I don't know if there's a way to be anonymous if you don't want your name used, but well, I have a feeling you guys can all see the comments. But ask anything, and if we get a lull in the questions coming in, usually what I do, although now I realize I don't actually have it pulled up, I usually pull up the recent news feed. You guys have been asking amazing questions. Oh great, Facebook's making me log in. I don't have a clue what my login is. Okay, so you guys can see who comments. Thanks, Amy. So maybe you don't get a choice to be anonymous. And Facebook's going to require me to do a two-factor login. So tonight we're going to be winging it. I'm not going to have reference to any of the questions being asked, but you guys have been asking amazing questions in the Turnkeys group, and even more than that, you guys have also been responding amazing. I think it's really helpful. I like to share what knowledge I have, but I certainly don't have all of the knowledge. So everyone with different perspectives, different experiences, that's really what the group is for. It's just meant to be an open platform to figure out this turnkey world, decipher it, sift through it, organize it. It can be a little chaotic, a lot of questions, a lot of mystery, so that's kind of what it's for. So anyways, back to how these Facebook Lives work. I'll take any questions. Go ahead and start popping those in the box if you have any. And then if not, I'll just kind of make things up as I go. We'll go for about an hour. So I've already been rambling for 7 minutes. So about an hour, give or take a little bit. And if you can't stay for the whole thing, don't worry. The video is going to get posted to the news feed. I was about to say live. It will get posted to the news feed as a recording. So you can always go back, reference it later, all that kind of stuff. So, first question's in. Amy says, what's your favorite hybrid market these days? I assume you mean cash flow and appreciation. So just clarify that that's what you mean by hybrid. Hello. You're going to have to tell me how to pronounce your name. Sneha? Make a dummy spelling for me. I want to make sure I pronounce it right. Great to have you on here. I know we've communicated quite a bit. It's so cool to see all of these names on here just because, when not technically it's different. It's not like we're face-to-face on Zoom or something, but, when it's all typed out, I don't always, again, I don't have faces to names all of a sudden, but it's just cool to interact in this kind of different way. So, Amy says, yes, hybrid market as far as cash flow and appreciation. So, great question, because this actually even kind of close. What? How bad was I? Sneha. Hey, that's actually kind of cool, too. I love all these names I'm not familiar with. Sneha. Ritu, it's so awesome to see you. We've communicated quite a bit. My favorite hybrid market right now, and why I'm excited to answer this question, is because this leads to a little bit of a broader conversation that I think is worth bringing up while the questions roll in. Tim, I just got yours, so we'll definitely hit on that. So typically the turnkey markets, back in when I started buying turnkeys in 2011, so in the middle of the crash, it was absolutely a common thing to buy cash flowing properties in markets that were experiencing a lot of appreciation. My first turnkeys ever were in Atlanta, and not to brag, they've all tripled and quadrupled in value since then. It's absurd. And unfortunately, as time went on, as we got out of the crash, the prices all went up. So, the more the prices go up, the less the appreciation potential, kind of across the board. And we really kind of got to the point where I would say almost right before the pandemic that prices were pretty high, where I can't remember, I think at the time Baltimore was experiencing some appreciation, if I remember right, but for the most part the appreciation component of turnkeys had kind of washed out because property prices were so high. So what has happened since the pandemic, which honestly is crazy town in my mind. I had no idea that a global pandemic would trigger housing demand to just go through the roof. So many people are buying now. Interest rates are low. It's crazy. With that said, it is, it's creating a different dynamic. So right now, right this second, in my opinion, there is actually room for appreciation in more places than you would assume. I was actually just going over some info. I think I have it here. Some information on Kansas City, which, you know, Midwestern markets are not at all really ever expected much for appreciation. So Kansas City, in the last 12 months alone, the home prices appreciated 10.29% in 12 months in a year. So this example that was given, so if someone bought a $100,000 rental property a year ago, plus, you know, closing costs, so say $25,000 out of pocket, 10% appreciation, that's $10,000 in equity growth. That is a 40% return on their cash invested in 1 year. So I say that to say that, oddly enough, there is kind of a different level of appreciation potential across the board right now because prices are continuing to rise across the board. Maybe even in markets like Kansas City that we wouldn't have expected that normally. The little caveat to that is we don't know at what point the prices are going to stop rising. There's speculation about the foreclosures finally being released. Who knows? So more than like a typical appreciation boom, this could be short-lived. I don't know. If you buy something today, chances are you're going to experience some appreciation pretty quickly. To what degree? I don't know. With that said, Amy, I know I have absolutely not answered your question at all. I would say of the turnkey markets right now, Jacksonville. Like, if anyone is interested in appreciation, I'm sending them to Jacksonville. I can't remember the exact percentage stats right off the bat, but over the last, I think, like 3 to 7 years, there's been notable appreciation, and there's more expected. So that is my favorite hybrid market right now. When I said originally that this leads to a broader conversation, I'll keep it short because we have some awesome questions coming in. But because of the inventory, the lack of inventory, if you guys have shopped turnkeys in the last like week or month, or couple months for that matter, you are seeing inventory is super low. That's because of the foreclosure moratoriums. Turnkey providers source not all of their properties from foreclosures, but it's certainly a huge percentage of the properties that they buy distressed, fix it up, sell it as a turnkey. So because of the foreclosure moratoriums, there are no foreclosures right now. So most of the inventories have been pretty finite at this point, and city by city, we're running out of inventory all over the place. So with that said, what's coming into play all of a sudden, due to that dynamic, is new construction, and more specifically, build to rent. So the downside, and I'm not going to get super detailed in this conversation unless you guys have questions about it. Yeah, Amy, the properties I work with in Jacksonville are new builds. So new construction and build to rent, the reason I'm bringing this up is because on the appreciation front, the downside to both of, well, the downside to new construction in general is going to be that your cap rate is going to be lower. It's just part of the trade-off. You know, you can't have the best of all the worlds in one property unless you're buying in 2011. So new builds, one thing that I like about them is it's not even just appreciation, but you also want to consider exit strategy. So what's going to be the future of your property? How are you going to get out of it if you want to? So, and this is something you should think about on every property that you buy, is what happens if I need to sell it? Like, there's a difference between investing in an appreciating market versus depreciating. Who are you going to sell the property to, and for how much money? So one nice thing that I like about new construction, again, acknowledging the trade-off on the cash flow, is, in my mind, and this may or may not be true in all cases, and it depends on what neighborhood it's in, it depends, you know, on different factors, but as a whole, a brand new property, in my mind, is going to be a lot easier to sell, hopefully to a primary home buyer, because they tend to pay more for properties. So from the value perspective, I think if you buy a new construction now, you are possibly going to be setting yourself up for more potential on the appreciation front should you sell it in the next few years, because, you know, now you're not trying to sell a 50-year-old property. The build to rents, the difference in new construction and build to rent, ultimately both properties are new construction. The new construction properties, or the new builds, are already built. So you're buying it just like you would a turnkey. freshly built, tenants in place, property management in place. The alternative to that is build to rents, and those are what's really they're really kind of creeping into turnkey world pretty quickly. And what happens in those cases, again, it can kind of change depending on the scenario, is you buy the property before it's built. So hopefully, your money's in escrow or something, and then the developer builds the property. And so you might have a year-long wait time. You have some amount of time where you're not making cash flow, so that's the downside. But at the end of it, once the property's built and tenants are placed in it, the idea is that the kind of trade-off with that is that you have immediate equity in the property, because what you pay for it before it's built is less than what it's worth when it's done being built. So back to this appreciation conversation, there's a few different ways you can get appreciation right now. Right now, just housing prices in general are going up. To what degree, what percentages, I don't know, and it's going to vary between markets, but it is a thing right now. Again, Kansas City having a 10% appreciation in 1 year over 2020, you could not have paid me to guess that. It's absurd. So that's one option. New construction, I just think not so much on the appreciation front, but like holding value front ultimately makes the difference in that equity. And then the build to rents, which are coming up, you always want to know what turnkey provider you're working with, but especially with build to rents, if you're putting your money down, you don't want to work with just any developer, because you don't want to get in a situation where you put your money into this build to rent and the developer pieces out with your money. So be cognizant of the dynamics and the risk and look more into that strategy. But from the appreciation standpoint, it might be one of the best options for, gaining more appreciation quicker. And on that note, Brian asked, how about the Berkey hybrid market, or the Burr/turnkey? I assume you're talking about the Berkey model. And the reason that I bring that up in conjunction to what we're talking about with the appreciation is, assuming you're talking about Berkeys. Berkeys, for anyone on here who's not familiar, shoot me a comment if you're not familiar with the Berkeys and you want a longer explanation. But essentially, the Berkey is combining the turnkey strategy with the Burr strategy. And the advantage to that is the work is all still being done for you, just like it would a turnkey. But on the Burr side, because you can capture forced appreciation, I don't know, I said that wrong. You can get forced appreciation at the time of purchase. That model allows for that to happen in a more turnkey style. Again, there's a lot of details behind that, but over the past few years, the Berkeys have kind of been the solution to, typically we pay market value for a turnkey, and that makes scalability hard. There's not really a way to improve the property, so we can't force appreciation. Bringing in the Berkey model is kind of the happy middle of that. It's a riskier model. I don't work with just anyone on that. But in terms of the Berkeys right now, again, hoping that's what Brian's asking about. Otherwise, I'm just offering random information. Right now, with where prices are and the lack of inventory, so I've worked with Berkey providers. I am still in touch with one that I absolutely love. But the problem with the Berkeys right now, from what I'm experiencing, is the whole benefit to the Berkey is, so let's say that you pay $60,000 for the property, you put $40,000 into the rehab, so you're $100,000 in, and at the time it finally gets tenants and it's rented out and whatever, it's worth $120,000, $130,000. So the major benefit, the direct benefit of assuming all of that risk, which you don't have on normal turnkeys, is that forced appreciation. So if you have 20, 30 grand in equity, all of a sudden, that's free money to you. So that's the advantage and why you might take on that risk. Right now, from what I can see, I was actually about to start working with Berkeys in Montgomery. One of my personal property managers in Atlanta was doing a lot of properties in Montgomery, and I was super excited about them. I wanted to offer them to you guys, so excited. But because of what's happened with prices, And the cost, Amy actually mentioned cost of lumber and material, and all of the drama associated with rehabs and construction because of COVID. The margins are not really there anymore. So Chicago, I was working with an awesome Turnkey provider, and they're just flat out of inventory. Chicago, across the board, multiple turnkey providers have zero to offer. That's a lack of inventory. But Montgomery, for example, what happened is the prices went up so fast that the margin closed. So what it would take for you to do the Turnkey, which is the pay for the distressed property and the rehab, let's say you're $100,000 into that puts you right at about market value. So in looking through all this further, what would essentially happen is you'd be taking on all that risk to still be at market value. The forced appreciation, that equity margin, is not really there right now. So unfortunately, we're kind of on hold for Turnkey markets. The complication with that being that you have to be very careful who you work with on the Turkeys. There's horror stories out there. You are assuming all of the risks that you don't normally with a regular turnkey. So the Turkeys, in my opinion, are already limited because some market may be super conducive to it. But if you don't have a solid, trustworthy Turnkey provider, not much you can do about it. So it was already super limited, and now the numbers are just not really offering that equity, because at the point you're going to pay market value for something, might as well just buy a turnkey with less risk. So hopefully those two things, I didn't hear back from Brian, but hopefully that's what you're asking about. And Amy, lumber materials are going up, and just general across the board, this is for everybody, rehab delays, construction delays. COVID's caused a lot of weird things, I'm sure we've all experienced. But, getting a lot of the supplies in, because a lot of them are shipped in from outside of the U.S., there's been limitations on that. The delays are ridiculous. Never mind lender delays. There are delays across the freaking board right now. So, yeah, prices are going up. Let me see. Let me go back, make sure. So Tim had asked any Huntsville turnkey providers you recommend. The only, the one that I would have recommended, I believe they're not in that market anymore. And honestly, I can't even think of the name of the company. I can picture the guy. But Huntsville, as far as I know, got pretty tight on inventory and prices went up. So I think there are a couple providers there. I don't know of any personally to recommend. Me and my team were actually in talks recently with a builder who is offering build to rents there. And when I say build to rent, if you guys aren't familiar with that term, it is, well, build it with the intention of renting it as an investment property versus like build it for you to live in it. So I'm actually hoping that the build to rent builder, they do a lot of really cool things I like, so we're in discussions with them. Again, build to rent is riskier, so we don't want to work with just anybody, but we are in the early stages of vetting possibly a build to rent person in Huntsville. Outside of that, unfortunately, I don't really have much to offer you on that one. Chris, any thoughts on the Detroit area, suburbs like Roseville, Warren, East Point? I honestly don't know anything about Detroit. I've started very casually putting some feelers out because earlier in my turnkey journey, Detroit was pretty bad, actually. A lot of people, and I can't think of the exact years that I'm referencing. I would say prior to, or I'd say like leading up to 2012, maybe, give or take a little bit of time. A lot of people leading up to that had invested in Detroit, and a lot of people had gotten burned. So around 2012, give or take a little bit, everyone I knew that had invested there was pulling out of it. It was chaos. It was terrible. Lots of lost investments. It was bad. But what I've been trying to kind of casually put some feelers out is just because it was bad then doesn't mean it's still bad now. Cleveland used to be something that I was pretty against, and the market has really kind of turned itself around. So market dynamics change all the time. So I've been wondering if Detroit dynamics have turned around at all, and I honestly haven't gotten much of a solid answer on that. I've only heard of, I think somebody in the group mentioned, was it in the group, mentioned a provider that they had bought through, or somebody maybe asked in a post. So I think there are a couple turnkey outfits there, but as far as anyone I know personally, I have no idea. Everybody I knew bolted out of Detroit, and I'm not sure if anyone has started coming back and or, you know, what the situation is there. I'm very curious because I would assume it would be a fantastic cash flow market, but the market fundamentals really have to be there too. So I don't know. If you find out anything, let me know, because I would definitely like to know more about it. Let's see. What do we got going on here? Who finds the renters in these new build turnkeys? I don't know if you're talking about new construction or the build to rents, but I guess the answer is the same for either. Whoever the property managers are that are set up to manage the properties, just like, oh, I thought I was about to miss something. Whoever the property managers are that would find tenants just like they would for standard turnkeys, same thing. So there's a property management company. Once a property is ready, they're going to go out, start screening tenants, however, you know, whatever means they would find tenants otherwise. Brian, you're very welcome. Trace, when would you say inventories will return to more normal levels? Isn't that the question of the year? And when interest rates go up? I have heard, I need to look into it, I think interest rates are starting to go up now. I don't think it's drastic, but I think they are changing direction. Inventories going back to normal levels. Here's the thing. I don't know that any of us really know for a couple reasons. Number one, it's going to be 100% dependent on whenever the foreclosure moratoriums lift. And as we all know, those have been extended. So has COVID. You know, whatever the time frame on all of that, I can only assume that as more and more people get vaccinated, as COVID starts to kind of lift, at some point that's going to play into the foreclosure moratoriums being lifted. So that's issue number one, is until those are lifted, nothing, we're going to be out of inventory. And honestly, whatever inventories are left, specifically existing properties, new builds and new construction don't fall into this. But the normal turnkey inventory, it's literally going to be on hold until the foreclosure moratoriums lift. That's unknown number one. Unknown number two, I've said this in the group a couple times, there is a lot of people want to believe, and maybe it turns out to be true, but a lot of people want to believe that when all of this backlogged foreclosure stuff gets released, that suddenly supply is going to be huge. Then, you know, the supply versus demand curve, which is really what's driving high prices right now, that it'll all even out. Well, two problems with that assumption. Number one, even when the foreclosure moratoriums lift, I don't think any of us really know exactly how long it's going to take for the inventory to start being released, because right now there's no foreclosures, but I don't personally know, and maybe there's an answer to this or maybe there's not, I don't know. You know, where in the process is the foreclosure stopping, if that makes any sense. So when the moratorium lifts, how much work has to be done in order to foreclose on that property? I don't really know. So if the moratorium lifts in June, then will any of those foreclosures even be available before December? I have no idea. So that's one part of it. And the other thing, the part that I've said in the group quite a few times is, if you guys remember the pictures, I was camping and rock crawling with Aaron Chapman, the lender, Marco from Narada. We were out in December, and there were quite a few other big-time real estate people there with us. And many of those guys have ties to the institutional investors. So people like hedge funds, you know, these big institutional buying power, real estate funds, hedge funds, all that kind of stuff. And all of those guys said that the institutional investors are literally hovering right now, waiting on the moratorium to lift and that inventory to be released. And many of them had the assumption, or have the assumption, that when that lift happens, the institutional investors, because they have the buying power, none of us personally can compete against institutional, because they don't buy 1 to 5 properties. They buy 50 to 500 properties. So if the institutional investors are literally hovering right now, waiting on this massive release of inventory, it's possible that none of us are even going to see it. You know, I'm sure they're not going to grab every property, but if the institutional investors scoop up the majority of that foreclosure inventory, you know, and they might, you know, they learned during the crash that it's insanely profitable. So there are so many unknowns on the inventory. I think honestly that's why so many people are focusing on the new construction, the build to rents, everything you have to build, because it has no relationship to the foreclosure issue. So that is a really long-winded answer to your question, all to say I have no idea. And I'll tell you, I wish inventories would return to normal levels. You know, it's frustrating because so many people want to buy right now and it's so limited. You know, I wish I had more to offer people, for sure. I think we all want that lifted. So fingers crossed. God bless COVID. Okay, Brian says, I'm looking at Cleveland for BRRRR and rentals. Would be your first deal. Well, that's very exciting. So are you specifically looking for a BRRRR property, or like for BRRRR and rentals? Do you mean like BRRRR and turnkey, like separate? Cleveland is, Ohio is one of the hardest states right now for inventory. They have had one of the strictest eviction foreclosure moratoriums. As you guys know, at some point, the federal moratoriums came in, but if a state's foreclosure moratorium, eviction moratorium is more strict than the federal, the state's wins. And Ohio has been very tough, which is why inventory has been crazy. So I'd be curious what you're finding for inventory. I like anything that starts with a newbie strategy question. So Timothy says, do you diversify the area and the properties you buy into? Like, for example, in one city, you have some for Section 8 and other has better appreciation market. So I actually, can I link to a video? Let me see if I can find this. I actually did a video kind of talking about this. Diversify. I have to find it. Oh yeah, here we go. Let's see if I can not make this play loudly. I will put this video in here. So, total sidebar, I've been doing more and more YouTube videos, and I'm going to start sharing a lot more of those on the group. So if at any point you guys go to YouTube to check out the video, if you like the video or it's helpful, please hit that little thumbs up. Apparently, that's a big thing for YouTube videos. Like, if YouTube is going to start seeing your videos and like working it into the algorithms, like it wants to see a lot of likes. Like, it needs to know that people are actually getting something from the whatever. So as I build the Turnkey Rental Properties playlist, I'm really hoping to hit so many turnkey topics, because there's not really a lot of the other turnkey guys. Like, there's some videos here and there, but I would love to like have a library. So I need these videos, like, you know, and let me know if they're helpful anyways. But if you check it out on YouTube, definitely give a thumbs up, subscribe to the channel if you're open. That'd be super appreciated. So I just put a video in the comments, and anyone who's watching this recorded versus live, well, should also be able to link this. It's at minute 43:47 is, or maybe like 43 minutes. Look for the comment around then, because there'll be a long list of comments, but I linked to that. Now, back to what you're asking. So do you diversify the area and properties you buy into? So I'm going to answer kind of specific to turnkeys, partially because this is a turnkeys thing, but also because it'll make my answer more simple instead of me batting around all sorts of ideas and coming up with all sorts of stuff. So I think, like, for example, and I think this is what I talked about in the video, let's say you want to buy 2 properties. You have enough cash to buy 2 properties. I think you should do, I mean, there's really no wrong answer, is what it really comes down to. But what I like and what I encourage people to do is buy one of each. I think I was talking to someone recently, like, you can, well, I can say you buy for cash flow in Kansas City. Apparently you can buy for cash flow and appreciation in Kansas City, according to the stats I was reading earlier. But typically, like, let's assume cheaper property for cash flow. Cleveland, Kansas City, any of those. Or going back to the Jacksonville properties, much lower on the cash flow, but a lot higher appreciation potential. So if you came to me right now and you had never bought a property and you're like, hey, I want to buy 2 turnkeys, what do you recommend? I would first go through your goals with you. Some people only care about cash flow. Some people want the equity potential, the appreciation potential. So my answer may fluctuate just based on what your personal goals are, but if there's not a specific goal swaying my answer one way or the other, I would say buy one of each, because you're going to be working with 2 different providers and you're getting 2 totally different things. So you have a new construction with appreciation potential and you have a cash flow property. If there's one thing I've learned, I was telling this to somebody, I don't know if you guys, I think you probably know from the post, I've been doing a lot more real estate coaching one-on-one lately. I've always done it over the years, but it was always kind of just a side thing. If I happened to meet someone, it would benefit. But I've really kind of taken it on for this year. Feels right to give back for 2020, and we're all stuck at home anyways. What else do we have to be doing? Is in my experience, and I say with turnkeys, but this is for rental properties in general, there's a lot of knowledge we can get, a lot of due diligence, a lot of risk mitigation, all sorts of stuff. But at the end of the day, there's really no way to know what the best performing properties are going to be. I always use the example of my 2 of my first turnkeys. One was much nicer. It's like 2,500. I still have it. 2,500 square feet, 4-bedroom, 2-bath, 2-story house. It was much newer, maybe 2005 or something. Nicer neighborhood, nicer city, the whole thing. And I had another one that is honestly on a street where most of the property managers who have ever had to do anything with it either have a gun in their car or have had to consider pulling the gun from their car. My property inspector had 2 hookers approach them in the driveway. So the reason I always look at those 2 properties is because you would think the nicer, bigger property in the nicer area would be the better performer. And I bought both of these when they were both scheduled to have a ton of cash flow. Now there'd be a big trade-off between those 2 types of properties, but both of these were supposed to cash flow really good. And I'll tell you, over the years, I've had both of those now for, let's see, I can't even do math, almost a decade. Let's see, 8-9 years. Over the course of everything, that more scary property, it's pretty cute, but it's not on a great street, has well outperformed the nicer one, including on the appreciation front. That pretty ghetto one has actually quadrupled in value, which I don't even have a clue how. But, so there's basic things that you can do, but at the end of the day, sometimes properties are just going to surprise you. So with all of that said, coming back to your question on the diversification, if people have the ability to buy a couple different ones, if you're just getting started, buy one of each, hold them for 6 months or a year, see what works better for you. And maybe it's not even direct investment return making the difference as much as just the experience. Maybe the returns are actually higher on the cheaper cash flowing properties, but you end up with a bunch of headaches. You have constant repairs, bad tenant, whatever. Or the new construction, maybe who knows what. So, because we can't totally always know what the best performing property is, buy one of each, play it by ear, and then whichever one performs better, go buy more of those. The circumstance in which I would say that's not true, and I would make a different recommendation, is if you find a turnkey provider, and this is specific to turnkeys, obviously, if you find a turnkey provider that you have a really good experience with and you feel good about and you love, buy as many as you can from them, because returns are one thing, but experience is another. So if it ain't broke, don't fix it. So, and plus, most markets are going to shift over time. Like what might be a great market and provider right now may not be true in a year, 2 years, or 5 years, or whatever. So if something is really working for you right now, buy more of that thing before you diversify. Because again, if it ain't broke, don't fix it. So I hope Timothy, that helped, and if you have any follow-up questions, pop those in the comments. Okay, Amy says, I think you used to have a provider in Harrisburg. What did you love about that market? Will you find another provider there? So, the provider we were working with in Harrisburg, basically, he broke up with us. Not because, we were we were great. He loved us, but he actually, properties were selling so fast that instead of, because think about the turnkey providers, when they sell to investors, I think I made this comment earlier, anytime you sell to an investor, you mostly have to sell it at some level of a discount because it's what investors expect. You can sell primary homes to primary home buyers for more. So while a turnkey provider is essentially a flipper, they're just like large scale flippers and they happen to flip to investors, they are still flippers. And the provider, he broke up with us because he no longer was going to flip to investors. He is now doing retail flips, which means selling to primary home buyers. And honestly, I don't blame him because there's way more money for them on that. People tend to think that turnkey providers make a ton of money on each property they sell. They do not. I can't speak for all of them, but most of the ones that I've known the margins, they're not nearly as high as you would think. So he broke up with us to go the retail route. What I loved about that market, I couldn't rattle off all the stats right now, but number one, it's the capital. There was a lot of government jobs there. And anytime you have government jobs, like from a security standpoint, which, obviously government jobs can kind of go different ways, but there was a lot of industry, a lot of perceived and presumed jobs and job security around there, lots of universities. There's just kind of a lot of dynamics that make for what I would consider, because when I'm thinking about a market, it's great if it can be a growth market, appreciating market, but even bigger in my head is there any chance of it declining? Because as soon as a market declines while I own property there, that's when we start getting into trouble. So Harrisburg, in my mind, it had so much going on and so much diversification. I didn't really see a decline coming. And I mean, as you know, you're asking about it. And like I said, the market got so hot, he didn't need us anymore. Basically, he didn't need turnkey buyers anymore. So that is reflective of how big that market is right now. As far as another provider there, I actually talked to one who Narada does work with. So if you are really wanting Harrisburg, I don't know what their inventory, well, I was about to give you my inventory argument with them. I don't know what their current status is, but Narada does work with a provider there. I actually had conversations with that provider, and the reason that I don't work with them is because, again, inventory was getting so low. Like I said, you have to ask Narada if they have anything right now, but basically what she told me was they get 2 to 3 properties at a time and they release it at once, and they're taken up by investors within like same day. And so my perspective of it was I don't really have the bandwidth or the manpower or honestly the technological power to even get those properties out to you guys fast enough. Obviously, if I get one, I could post in the group, but it's such a fast thing, and the way that it was described to me is it seemed like a competition level that I honestly wasn't going to be able to keep up with. So that's why I'm not working with a provider there. I don't know that I've heard of any other providers there, so I don't know if it's just the one main one. I don't know the status of that, but I love the market. If I had access to a provider there, I would 100% work with properties there again. Brian says, would start with a BRRRR as I'd be buying with a HELOC, would buy rentals later as I build up capital. Totally understood. Yeah, I mean, snowballing capital is kind of one of the biggest challenges, if you will. Timothy, thanks, Allie. Definitely will check it out after the live session. Awesome. Again, shoot a thumbs up on the video if it's helpful. Nothing like coughing in you guys' ears. So we have about, did I get on here earlier? It says I've been live for 55 minutes, but my clock says it's 5:45. So in my mind, we have 15 minutes left. So whatever burning questions you have, go ahead and pop them over because we'll start tapering off soon. Brian says, I'm definitely looking at Section 8 for tenant pool in Cleveland. Yeah, Section 8, for anyone watching, it really, how desirable Section 8 is going to vary between the market. I don't know anything about the Section 8 dynamics in Cleveland. So, anyone, like Chicago, for example, you're really and Baltimore, in a lot of cases, you're really better off having Section 8 tenants. Other markets, maybe not so much. So always, talk to local market people to find out more about that. I'm going to mess up your name. Is it Thean? Thean? Let me know how to pronounce that. You guys are giving me the name challenges today. I love it. It's been so hard to grab stuff off of the MLS. Do you suggest newbies to form an LLC to not only build business credit for leverage to purchase all cash and or grab them cash via hard money? Okay, hang on. That was a lot quickly. So hard money, typically, if we're talking about, so I'm speaking just about turnkeys. I don't know if you are specifically talking about turnkeys because you mentioned the MLS. Hard money is really only for flipping type of, I shouldn't say only, I actually have no idea, but hard money is used more often for like a flipping type of situation because it's a short-term loan. It might only be 6 months long, it might be 12 months, but when we're talking about turnkey rental properties, this is a rental property that's a long-term hold. So hard money is not really, the only thing you could possibly maybe do with hard money, and I don't know lending requirements, whether you can use hard money for a down payment or not. That would be the only situation that I could see hard money working. If you, borrowed the however much for a down payment, 20, 30 grand, and then had some way of paying it back in 6 to 12 months. But again, I don't know if lenders accept that as a source of down payment. So hard money in my mind is out. The LLC to build business credit for leverage to purchase all cash. I don't totally follow what you're saying on that one. If you have any clarifications, shoot them over. I'll keep an eye out for them. In terms of forming an LLC to build business credit, so my company is an LLC, and over the decade or however long I've had my company, I have somehow never built business credit. Business credit I don't think is super easy to build. I actually know nothing about it other than I've never been able to build it and I have a business. So I don't know in terms of owning rental properties and having them in an LLC what that does or doesn't do for business credit. I would, first of all, if you form an LLC before you buy the property, you're not going to be able to get financing. Like, you're really going to mess up your financing options. And right now, mortgage interest rates are so low. If you have any ability to get a mortgage, I would get it. So, if you go straight into LLC and you're talking about like commercial financing or any of that kind of stuff, like, it's a whole different animal. I don't follow what you're saying about for leverage to purchase all cash. You have to expand on that one a little bit. But as far as an LLC in general, to me, you specifically said newbies. I think forming an LLC is really putting the cart before the horse. One thing people don't realize about LLCs, first of all, they can be expensive. If you live in California, where I do, you're automatically going to have $800 a year fee. So that's going to mess up cash flow. Your financing is going to get more difficult and all that. But one thing people don't realize about LLCs when it comes to real estate or like rental properties, for example, and I can't give you details on this, you would have to talk to real estate attorneys to get details, because just kind of a disclaimer, when I started buying my turnkeys, I of course looked into LLCs because I was under the impression, like everybody is, that you needed one. And after countless hours of talking to my accountants, lawyers, a little bit here and there, but all my research, I have not gone the LLC route and for my properties because number one, the difficulty, the cost, all of that kind of stuff. But the thing that people oftentimes don't realize is if you own a rental property and it's backed by and you have a federally backed loan on it, Freddie Mae, okay, it's getting that time of night, Fannie Mae, Freddie Mac, all of that kind of stuff, there are loopholes to the asset protection that an LLC offers. And most people get LLCs for the asset protection. I've not really heard of people doing it for the business credit or whatever, but people want the so-called asset protection. But because your name still has to personally guarantee that loan, it opens up loopholes it's not 100% asset protection. So again, I'm not a legal or finance professional, any of that, so you would want to double check everything. But in my opinion, for all of those reasons and all of the details that go along with those reasons, just for the sense that you said newbie, I would say LLCs are a lot. And I think you could end up getting pretty disappointed in what you're trying to achieve. So my recommendation in that case would be to talk to a real estate attorney. Real estate attorneys, for sure, 100% are going to say, get the LLC, because they've seen everything. So they have reason to freak on the liability, absolutely. But I would talk to a professional, but I would learn a lot more about it before you do it, because you could really kind of be shooting yourself in the foot in a lot of ways. Grabbing stuff off the MLS, I can't speak to. Turnkeys don't come from the MLS. Thank God, I have no interest in the MLS. Okay, so how do you learn which market to choose? Can you rely on the turnkey provider picking the best markets? So here's what I was actually just talking to somebody about this. I forgot to turn a lamp on, and the sun has gone away. So I feel like I'm going to be holding a flashlight soon, talking around a campfire. Yeah, there's not a lot of light left going on. Oh wait, let's see. Do I have? I also think I thought that I don't know if this is helpful. Okay. I definitely still have that campfire, eerie vibe. I was actually just talking to somebody about this. I don't remember who. So as far as how you learn what market to choose and can you rely on the turnkey provider picking the best market, I'm going to start with that question first because my answer on that is much shorter. I'm going to throw another video. This is what's getting handy about these YouTube videos, is I can offer videos. My answer to can you rely on the turnkey provider picking the best market, that question is exactly why I am a big fan, amongst other reasons. I am a huge fan of working through the turnkey marketing companies rather than direct providers, and I use that exact example. So for anyone looking for this video, I just posted it in the comments, although it's not showing up. Oh, there it is. Around 1 hour and 2 minutes, if you're trying to scroll through the comments to find it. It's a video that explains why I prefer working through turnkey marketing companies. So it's answering a lot more than what you're asking. But in there, I use the example, I think, if you go to a turnkey provider who is in one market, like a Harrisburg provider, a Memphis provider, and you, as an investor, you're trying to grow your portfolio, strategize, what you want to do in the long term, and part of that is choosing a market. So if you ask that provider, hey, what's the best market to be buying in? Well, which one do you think that they're going to tell you? Hello, the market that they are working in. And their market may be fantastic, but it may not be the perfect market for your situation. So one of the reasons I really like working through the turnkey marketing companies, again, amongst a million other reasons why I prefer them, is because you can go to them, because they work with providers in multiple markets, you can say, hey, here's my goals, here's what I'm trying to achieve, yada, 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 what do you recommend? And they might say, well, based on your goals, I 100% recommend Cleveland over Jacksonville, or I absolutely recommend Jacksonville over Cleveland or Kansas City because da-da-da-da-da. And so because they have multiple offerings, it doesn't matter to them which one you choose, so they have every reason to really want to help you strategize. So, can you rely on the turnkey provider picking the best market? Maybe, but they are going to be very biased because they're only going to offer the markets that they work in. Again, they could be fantastic, but it may not be the best market for you. So, like I was talking earlier about comparing diversifying with a Kansas City option and a Jacksonville option, they're not going to tell you, well, you should definitely diversify and try whatever, because they're only in one market or the other. So then how do you learn which market to choose? I'm actually really excited you asked, because this is what I was talking to somebody earlier this week about. I should have had a water over here. I'm getting so excited I'm getting choked up. One thing I really like about turnkeys, there's a lot of things about turnkeys in my mind that are huge benefits that people don't realize. I can go into those another time. I've started putting videos out about, benefits about turnkeys that people don't realize. But one of them, in my mind, like if you're a brand new real estate investor and you're like, I want a rental property and I'm going to buy out of state because I live in California, there's no cash flow, so I'm going to go buy something. And let's say you're shopping on the MLS. There is so much market analysis that is possible for you to need to know in order to determine if what you're buying or where you're buying is good and legit. That's a lot of knowledge. Like that can be overwhelming. I was talking to someone earlier, maybe I was recording a video, I don't remember. When you go to analyze a market, it's not as easy as you think. You can get stats and data all day long, but if you don't know how to interpret it, which most of us don't, it's not helpful. So one nice thing I like about turnkeys, in terms of learning which market to choose, a huge advantage, if you want to look at it this way, is if you're setting out on your own to go find a property on the MLS or whatever, you have to find out all of the information or figure out all of the information that you need in order to determine if it's a good market or not. That's a lot, as I was just saying. With turnkeys, shy of any bad turnkey providers, most of the turnkey providers are in proven markets. Indianapolis, proven for a decade. Jacksonville, proven. Kansas City, absolutely proven. Detroit, questionable. I don't know. I'm not sure Detroit's status. Cleveland used to not be great. Now it's pretty good. Because they're only in certain markets, instead of, it's kind of like a top-down approach versus starting at the bottom and having to work your way to the top. And what I mean by that is with turnkeys, and this is kind of relevant to a lot of aspects of turnkeys, instead of having to determine the market that you buy in, all you really need to do is verify the market you're choosing. So again, if I'm sitting here in California, which I am actually, sitting here in California and the world's at my fingertips, I want to buy a rental property off the MLS, I have to find all of that knowledge in order to point me to where I think I should go. If I look at the turnkey aspect, there are only so many markets where the turnkey providers are, and shy of maybe one or two example, like certain markets that maybe aren't all that advantageous, which I can't even think of right off the bat, I only have, say, 5 to 10 markets to choose from. So instead of worrying as much about the market, what I look at is the opportunity. We gave the example of new construction, lower cash flow, higher appreciation potential in Jacksonville versus cash flow in Cleveland or Kansas City. I look at those things first because I look at the offering that the turnkey providers offering, because depending on what my goal is, if I only care about lower entry prices and cash flow, I'm going to look at Cleveland, not Jacksonville. Or if I want the appreciation potential for potential snowball ability later, I'm going to look at Jacksonville. So I'm actually focused on the differences between the opportunities, and then once I narrow that down, what I'm doing in terms of market analysis is really just verifying instead of determining. I hope that makes sense. And verifying is, there's a lot of details in that. Like, you want to make sure that, I just, accidentally punched my little computer mouse and we almost lost it off the side of the desk. Verifying is, there's a lot of due diligence stuff, so you still have to learn all sorts of different things, like what makes for a good market, like whatever, but instead of determining it, which is a lot of information, you're verifying it. So let me know if that in any way makes sense, because I can go further into it, but you guys might totally be following what I'm saying, and I don't need to keep on about it. So that's what I look at. I think that's one of the major advantages with turnkeys is instead of determining everything on your own, you're really instead reversing the equation and just verifying everything. And just by verifying everything, you really are going to learn a ton. Like, you're going to learn so much about what makes for a good rental property, what makes for a good neighborhood, all of that kind of stuff, but without the pressure of having to take it further in order to determine what market you choose. Let me know if that was helpful. let me scroll down. Oh, perfect. Yes. I think that was for the, was it helpful? Okay, let me backtrack. Amy, thanks for the info on Harrisburg. Great insights. I wonder if your original provider did in-house management. Sounds like a no. Actually, I think they did offer in-house management. What I do remember about them is they, at the time, one of the reasons we were so bummed that they broke up with us is they had the best track record with property management. Like, everybody working with their property managers were elated. They were, which, trust me, I don't get many reports like that when it comes to property management. So, anyone wanting a good property management experience, we actually sent them specifically to the Harrisburg provider. But I can't remember if that was in-house or third party. I would be curious, and then we're going to start kind of cutting this off pretty soon. But real quick, while we're on the topic, I'd be curious of why you're interested in in-house management. I may or may not have another video, depending on if you have any feedback on in-house management versus third party. If you guys are interested in my pros and cons list about those, because I'm actually not set on requiring in-house management. To me, the spoiler alert of my pros and cons list is that between in-house management and third-party property management, I think the pros and cons list balances each other out. I don't think one is better than the other, and I explain it in the video. Let me know if you want me to link that video in there, or if anybody wants more. So if anyone's not following what I'm even talking about, when you buy from a turnkey provider, the properties come with property management. Some of the providers, the property management division, if you will, is under the same umbrella as the turnkey provider themselves. Other turnkey providers don't have it under their umbrella, but they contract it out to a third-party property management company. There is tons and tons of people always saying, well, I want in-house property management. That's why I did a video about it, is there really a huge advantage to that? So that's what I talked about in the video. Okay, so I'm going to cut off, let's see, I'm going to cut off the questions. Let me go through real quick and see which ones I have not hit. Caesar, thoughts on Memphis? Do you know any providers there? There are so many providers in Memphis. I don't work with any of them because I have never liked Memphis as a market. I should probably do a video on this because people bring it up all the time. Even when Memphis was totally one of the happening places, nothing like sounding like an 85-year-old, back in 2010 to 2012, I didn't even like Memphis then. I don't think it's bad, but it's just not a market that has ever appealed to me, so therefore I've never worked with any providers there. I used to be, back in the old days, a huge fan of Memphis Invest. They're now REI Nation, and now they do a lot of things that I don't agree with, so I no longer really, I don't want to say I don't support them. I don't feel the same way about them now that I used to back in the day. Mid-South Home Buyers is easily the most popular, but I think they're up to like a years-long wait list. And I also think Memphis, I believe, is starting to run out of inventory. I think it's getting really low. So I can't help you a whole lot on the Memphis front. Chris, free course, all about data-driven market selection. Ooh, maybe I'll take it. I hate market analysis, I'm not going to lie. Let me scroll. Hopefully I didn't miss. I feel like I had seen some that maybe I missed, but last question, unless someone totally calls me out for missing something, please do. If I missed your question and you're sitting here waiting on it, please let me know. But just in the matter of time. So the last question is, how often do the turnkey property management companies fail you? I don't want to specify turnkey property management companies. I would just look at it as turnkey property management companies as a whole, and they have failed me left and right. Property managers are not the cream of the crop. Typically, there are some fantastic ones out there, but man almighty, I would say easily, of all things, thank you, Jesse. I knew I missed a question somewhere. What was I just saying? Oh, property management as a whole is probably the toughest part of the whole equation, and keeping property managers, I would say, I have been on the earliest turnkeys that I bought, and the property managers that came with those properties back then were a very different caliber than they are now, because things were happening so fast back then during the crash. Everyone and their mothers had started a turnkey company. Like, quality was not required. I mean, it was a free for all. So it makes sense to me that basically all of the original property managers from those properties totally clunked out, where that's not necessarily the case now, because all of the turnkey provider companies who really kind of survived that era, if you will, they are obviously higher quality. For some reason, they were able to get through that period. So as far as the property management company failure, in thinking of my own and everybody I work with, I can't really say how often. I would just say the biggest thing is to be on the lookout. And again, it's not just turnkey property managers, it's kind of all property managers. Just for, you guys' knowledge, you don't have to accept the property management company that comes with the property if you don't want to. There's a couple, I have a video on this too. There are a couple reasons I suggest that you do, but you certainly don't have to. You can choose any property manager. And once you start with one property manager, you own the property. So you can hire and fire property managers. You're the boss. You own the property. It's up to you to maintain the returns on the maintain control over that property. So, you're not obligated to any part of the property management equation that comes with it. So, okay, Timothy says, agree with you in regards to REI Nation. Me and Chris Clothier, years and years ago, me, him, and Matt Bowles from Maverick all went to IHOP on International Pancake Day. So we've eaten free pancakes together. Me and Chris both have had a big presence on Bigger Pockets. He has, for years, supported me. I supported them, even though I wasn't working with them. And I haven't talked to Chris in a while, but there's just so many things now about that company that it's not a bad. I don't want anyone to think that I'm saying it's a bad company to work with. I think they are known. I will give them this. They are absolutely known to be one of the best customer service experiences in turnkey world, which is huge, because trust me, we could afford to have a little more customer service in turnkey world. So I hate even saying that I don't agree or support certain parts of their company, but yeah, there's a lot about it that it kind of goes against my soul, or I don't want to say moral code, because that was just shady. It's not, but it's just, there's just some things I don't like. Anyways, okay, so last question, and then we are going to call it. Jesse said, what turnkey marketers have you bought from? Shoot me a message. I will email about that. Yeah, I just kind of don't throw it completely out, just partially because I don't want to mislead anyone. Certain companies that I worked through earlier days may or may not have worked out. I'll definitely give you my recommendation. Sorry, that was I missed your question, and then that was my answer to it. So I apologize for keeping you in the wait about that. If you guys ever want to email me, I will put my email address in the comments. You've probably seen it in the post. So I actually, I've said this in a lot of previous Facebook Lives, I'm actually super sad to call it off. I actually have to go to the gym at some point. But we are at about an hour and 10 minutes. The questions were fantastic. What I would really like to hear from you guys is if this was helpful. Because again, if it was, then I'm happy to make these a regular thing. They were super regular in the beginning of the Facebook group a couple of years ago. I think I was doing them weekly, like every Monday night. I probably wouldn't do them weekly right now, but maybe once a month we do this. So shoot some thumbs up, shoot some comments, give some feedback. If you want to keep these things going, I'm 100% open. I love doing these things because you guys really bring forward awesome questions. I love the discussions. Again, I apologize. The new Facebook platform, I can't figure out how to know who is on here. It used to be on old Facebook that I could see your name pop up when you joined, so I could actually say hi. So please know that I have not specifically said hi to you unless you commented, just because I don't know who's on here. Nothing intimidating about that. Like, who's watching me? I don't know. Brian, great live stream. Thank you, Allie. Very helpful to this newbie. Awesome. So glad to hear. I'm here for you guys. Whatever you need, reach out anytime. You have my email address. Post questions in the Facebook group, because I guarantee if you have a question, a million other people in the group have it. A special welcome to all of the new people who have joined. I actually had to really kind of clamp down on the entry requirements for people to get in because we had so many people joining and it was quickly going to become a circus. So if you suggest the group to your friends, make sure they answer the questions when they try and get in. Timothy, or let's see, Caesar, very helpful. Thanks, Allie. You're very, very welcome. Thank you for joining. Timothy, Allie, and everyone, thank you for your time, helpful questions, insights, and information. I could not agree more. Like, this would not be a thing if you guys didn't bring your insights, questions, comments, all of that kind of stuff. And again, I don't just run this group for the business side of it. I love meeting you guys. I love interacting, especially during 2020. I mean, I work from home anyways, but I'm usually I've always been on my own for turnkey world, real estate investing world. I've, have mentors and all that kind of stuff. But as far as like a crew, you guys are kind of it. So I could not be more appreciative. I love meeting you guys. Please reach out. Never be shy. Let me know in any way if I can help. And then definitely let me know if these are helpful, and we will keep them going. So on that note, I'm going to say, reluctantly, say goodbye, because I would actually, if I allowed myself, I would do this for the next, 2 hours, because it's just, I'm a nerd. It's just that much fun. So hopefully talk to you guys soon in the group. Reach out anytime, and hopefully we'll do this again.